What's up, traders? Well, we finally got another one. It took a few days and we got a signal. Of course, my phone was blowing up with the alerts coming off of TradingView, so I know it works. I also had some direct messages and comments on TradingView from people that were looking at this as well. And yeah, it works. So good. If you're following this, I'm going to make it better now because I promised that we would talk about the risk reward aspect. Because if we're going to trade something, we have to have a component that lets us build it into a strategy. So let's talk about it. Let's look at this example that happened today. So this fired on multiple time frames, all the way from the 2 hour, the 1 hour, the 30 minute, whatever you had it on, you got signals. Now, as I said, I really prefer to use the 1 hour. And the reason is because on the 30 minute right here, you had two separate instances. And so this one was a 400%, and then the next one that followed it was a 500%. So this kind of begs the question about the time frame that we use and also the threshold that we use, because clearly the 400% was not valid. So we may want to up it to 500%. Again, we don't want to curve fit too much, but we need to take into account that the wider the threshold that we give it, or rather the larger bar that we may look for, the better our opportunities may be, but we may get fewer. Or we can go up to a higher time frame to kind of normalize it out. And in this case, we had a full 500%. Now, in a lot of cases, if you had your alert set at 300%, then you probably would have gotten a notification somewhere around in here, because that's going to be about the 300%. And if you went in at that level, well, you probably did okay. You're still making money. The dip still worked, but we want to make this better, because as you can see, it's coming back right now. And at some point, we need to know when to take profit, as well as when to accept that, well, it's not working out, and we protect our capital and we stop ourselves out. So to that end, I went through a couple of scenarios here, and I've recoded the indicator. We're going to talk about that here in a second, why I did it. So let me first go through my thought process of why I'm doing the thing that I'm doing with the indicator, and then it's going to be released for everyone to use. This explanation is the process of trading. Now, I could make this and sell it to people for, $1,000 a pop, or charge $100 for a Discord room, but I'm not going to do that because I don't want to. The reason I'm going into such detail, and if you get bored by it, then leave. The reason I go into such detail is because this is the process of trading. It's about recognizing a phenomenon and building a trading system around it. So that being said, here's what I went through today on this particular bar. Now, let's look at this a little bit closer. Now, we're using the higher time frames, the 1 hour, 30-minute, 2 hours, something like that, to find these volatile bars, because those are going to be significant. But now that we have this signal, we can go down to a lower time frame. So probably once we got the 300%, right around here was probably where that might have been, about 37. Okay. Let's go down to a 5-minute. Now, if you look on the 5-minute, of course, being a lower time frame, there were lots of signals up here, and these weren't really very good dip buys. Even this one wasn't a very great one. So that's why it's, again, important to go the higher time frame. But once we got that signal on the 1 hour, let's just take a look at this. Actually, yeah. So if we got the signal on the 1 hour at about the 300% level, that's going to, once we look at the 5-minute, which I looked at when it was live, give us another signal on a lower time frame. Okay, so now that we have this one, we have the higher time frame, and then we have a lower time frame, a really volatile dip on the lower time frame. Now we can start to look at this from the perspective of building a trade around it. So the question is, when do we enter? Well, let's just take this bar itself. As it's coming down, it's going to highlight it before the bar is finished. So once it gets down to about the 300% range, what we want to look for is basically the halfway point. Okay, so we want to look for the halfway point of the high to the low, the 50% of the bar. We're probably going to be somewhere around there. So if we think about this as far as the bar is progressing, in other words, the bar is probably going to look something like it's going to be red down to here. When it gets back above this 50%, what we could do is we could set a breakout order, basically to catch it as it crosses over the 50%. In other words, it's already made a wick down. Now we're going to buy it at this point after it comes over the 50% of this bar, and we'll see where it goes from there and try to make some profit off of the dip. But if we're going to structure a trade around this, then we need to know, well, where's our stop going to be? Our stop needs to be, if we're going to be as tight as we can, just below this bar. In other words, just below the wick of the bar. Now, it could continue down, the dip could continue, but that's the risk we take. Once we've established our entry, the 50% of the bar, and we've established where our stop needs to be, we could do this manually. We could go through here in the trading view and use the risk reward tool to find ourselves an acceptable risk reward. In this case right here, it comes out to about a 2-to-1. There's the 2 right there because this is where our stop is and just automatically draws it for us. This is a pretty acceptable trade. If we wanted to go up to, say, a 3-to-1, well, then we can draw it up to here. And this actually works out pretty well because this would be something coming close to a retest of, well, what's now the all-time high of Bitcoin. So in order to make this a lot simpler, I went ahead and took the old indicator and released an update with a new one. And so this one automatically draws by default with the little orange cross the middle of the bar. And so once it gets to that point, and this is going to move as the bar moves, but you want to get to that threshold, maybe 300-400%, and then start looking for the cross. At that point, you can buy it. And if you look here, the indicator automatically draws a little green dot right here that's going to show you where your stop needs to be. Then it's going to draw another green dot up here for the target. So stop, set to there, the target is there, and then that is going to be, by default, a 3-to-1. And you can set all this. The stop buffer is 33%. That's 33% of ATR. I like to use ATR in pretty much everything stop related. I like to use ATR a lot, basically, if you can't tell. But this is going to give us a nice buffer where, yeah, we might get shaken out, but that's about all we need to give it. So we could change that to, of course, maybe like 25 or something like that, and that sort of changes our risk reward. But the default's 33%. You can mess with that if you want to. You give it 100% if you wanted to. 100% would be 1 ATR stop. And then our reward multiple we can change. By default, I have it as 3. But you could change that to a 2-to-1, and that's going to move your target down to here. Or you could even go for, I don't know, a 5-to-1 YOLO, and that's going to move it all the way up here for your trade. And again, that's going to be about 5-to-1. So I'm basically, with this addition, I'm giving an entry point, but more importantly, I'm wrapping around the money management, the risk management portion, where we can have a defined amount of risk after we've entered, so we can do our position sizing, etc., and a take profit target so that we can capture some of these gains. Now, of course, we probably want to keep some on in case we keep going bullish because, it's going to Mars, isn't it? But the point of having to take profit is that we take a little bit off the table. I think that's going to be important because you never know what can happen. So how much you take off the table at the take profit, that's going to be up to you in your trading. But with this addition for everyone, this takes this phenomenon, this volatile bar phenomenon, and wraps a trading strategy around it. And that's what's useful. Just saying that something happened doesn't make you any money. But wrapping a plan around it does. So, trade at your own risk. Open to some feedback. By the way, if you are a PineScript trading view coding guru, more than welcome for you to come in and clean up my code, because I rely on nested if statements way too much. So, trade responsibly, guys. We'll see you in the next video.